All right, let's dive right in. Today we're talking about one of the most powerful signals you can find on a price chart, the engulfing candle. Seriously, whether you've been trading for years or just getting started, really understanding this pattern can be a complete game changer for your analysis.
So think about the market for a second. It's basically this constant tug of war, right? Buyers on one side, sellers on the other. It's usually a messy fight. But what if one side could land a massive, decisive knockout blow in a single candle? Well, that's exactly what an engulfing candle is. It's the story of a sudden, dramatic power shift, all laid out for you to see.
So why is this little two-candle story such a big deal? Because it's a huge red flag that the old momentum, whatever it was, just got stopped dead in its tracks. And not only stopped, but potentially reversed with some serious force.
What really makes this pattern so potent is the psychology behind it. It literally shows one side, either the buyers or the sellers, just completely overwhelming the other in a very short amount of time. You know, this isn't some slow, gradual change of heart. This is a statement. It's a sudden wave of either panic or total euphoria, screaming that the old trend might be over and a new one is kicking off.
Okay, so how do we actually spot one of these in the wild? Let's break down the anatomy of the pattern, because when it comes to trading, precision is absolutely everything.
The main rule here is super simple, but you've got to be strict about it. It's a two-candle pattern. The key is that the body of the second candle, that's the thick colored part, has to completely swallow or engulf the body of the candle right before it. The wicks, those little lines, don't really matter here. It's all about the body. That part is non-negotiable.
Now, this pattern comes in two flavors. First up, you've got the bullish engulfing. This happens after prices have been falling. You'll see a small red candle and then bam, a massive green candle completely swallows it. That's your signal that buyers just storm the gates. And on the flip side, you have the bearish engulfing. It's the exact opposite story. After prices have been rising, a huge red candle engulfs the green one before it, showing the sellers just took control in a big way.
But hold on, just spotting the pattern isn't the whole game. Not even close. To actually use it effectively and, more importantly, avoid the fakeouts, you absolutely need a plan. So let's build one right now with a simple three-step strategy.
Here it is, the three pillars of a solid engulfing candle trade: location, signal, and confirmation. I want you to think of these as your personal checklist. When you can check off all three, your odds of a successful trade go way, way up. Let's break them down one by one.
Okay, step one, and this might be the most important part: context is king. An engulfing candle just floating around in the middle of nowhere on a chart, it's pretty much meaningless. You want to see this pattern show up at a major support or resistance level. You know, those price floors and ceilings where the market has reversed before. A pattern here has weight because it's happening where a big battle is expected to be fought.
Now, this next step is all about discipline. It is so tempting to jump the gun when you see a candle that looks like it's going to be a perfect engulfing pattern. But you have to resist. You must wait for that candle to officially close. The whole story can change in the last few seconds. Patience here will save you from so many costly mistakes.
And finally, step 3 is about getting a second opinion. Look, a beautiful engulfing candle at a key location is great, but getting confirmation from another tool, that adds a whole other layer of confidence. It's what helps you filter out the maybe signals from the A+ high probability setups.
So, what kind of tools are we talking about? Well, for example, you could check the RSI indicator. Is it showing an extreme overbought or oversold reading? That's great confirmation. Or what about volume? A huge spike in trading volume on that engulfing candle tells you there was real conviction, real money behind that move. Or maybe the pattern forms right at the edge of a Bollinger Band. All of these just add more evidence to your case.
And here is a perfect example of what it looks like when everything lines up. On this gold chart, look at this. We have a clear resistance zone. That's our location. Then, right at that level, a massive bearish engulfing candle forms. That's our signal. And to top it all off, the RSI indicator down below was screaming overbought. That's our confirmation. Location, signal, confirmation. It's just textbook.
Now let's look at the opposite. This is a classic trap. Here on the Bitcoin chart, yeah, we see an engulfing candle. But where is it? It's lost in the middle of this choppy, messy, sideways price action. It's not at a key level, and there's no strong confirmation from any other tools. This is the kind of pattern that chews up impatient traders. And this is exactly why our three-step process is so important.
All right, so identifying a great setup, that's one thing. But managing the trade and, frankly, managing your own emotions, that's what really separates the consistently profitable traders from everyone else.
So let's talk about the rules that protect both your capital and your sanity. Think of these as your safety net. They are absolutely non-negotiable. Number 1, always use a stop loss. Place it just beyond the high or low of that engulfing candle. It's your escape hatch if you're wrong. We've already talked about avoiding choppy markets and waiting for the candle close. But most importantly, trust the process. Trust your checklist.
You know, this quote from the great Van K. Tharp just says it all, doesn't it? You can memorize every pattern in the book, but if you don't have the discipline to follow your own rules, none of that knowledge matters. Trading is a psychological game first and an analytical game second.
So, after all of this, I have a question for you, and it's very relevant to today's market. With all the volatility we're seeing in assets like Bitcoin and gold, which signal would you have more confidence in right now? A powerful bullish engulfing candle showing up at a key support level, or a dominant bearish engulfing candle appearing at resistance? Let me know what you think in the comments below. I'm really curious to hear your take. Thanks for tuning in.